As one of the most volatile and bullish stocks during the peak of 2020 and 2021, SoFi has definitely been on most traders' radar and shortlist. As one of the more developed fintech companies around, SoFi has accomplished something that most fintech either couldn't or didn't bother to obtain: a bank license. With that key document in hand, SoFi stands as one of the most fleshed out and comprehensive fintech companies out there. With that being said, the recent stock performance of SoFi has followed the market trend overall down. Nevertheless, many people are still interested by eventually buying SoFi because it seems to have so much potentials. In today's video, we will take a fresh look at SoFi and try to work out if you should be buying them. As always, if you like what I do, please consider to drop a like, subscribe to my channel, and check out the links down in the description. So before we begin, I'd just like to state a brief disclaimer about my videos, what they are and aren't. What is presented here are my opinions. They should not be considered as investment advice because it's really not, it's just my personal input. They should be watched for entertainment purposes only. They may be able to help you make more educated decisions, but shouldn't be used as the sole material for the decision making. Most of my analysis is done in the immediate past or just a few days before the uploading of the videos, and the price action might not reflect what you see on the chart by the time you see my videos, but they are momentum analysis tools, so they're not necessarily here to analyze the latest pin bars if you're on like the 4 hours chart or 1 hour chart. Also, the analysis tries to cover the stock as comprehensively as possible so that it'll talk about more factors than just the latest news. For example, the company's financials, the market trends, the long-term perspectives, and the shareholder behaviors are all going to affect your decision about how much you want to buy, how many shares you want to buy, and what price you want to buy for. Most of my viewers would be watching my videos for the first time, so it is important for them to consider these factors. So with that being said, let's begin with today's topic. SoFi is a fintech company that aims to become a virtual bank, essentially, for people who are looking for more functionality, flexibility, and better fees. Now, as people change their needs over time regarding how and where they're going to have access to their money, SoFi identified this opportunity to do better than traditional banks, offering a scalable, consistent, and I would say smarter kind of service to the users and clients. Unlike many fintech companies offering different parts of what a bank can do, it's worth pointing out that SoFi tries to bring all those services under one umbrella. In order to optimize the acquisition cost of each product, the company also excels in areas of loan refinancing, personal banking, and wealth management. It's recently under some selling pressure due to the student loan moratorium, and with that won most of its gains throughout the bullish period. However, it should be mentioned that despite the challenging environment, it's not just bad news for the financial institutions like SoFi. On one hand, people are more aware of the financial fees that traditional banks are charging, and many are looking for alternatives given that the recession forces them to cut spendings. SoFi might be one of the companies that can satisfy this need for better fees. This might be one of the reasons why, despite having a challenging investment environment, SoFi still managed to see a growth in its customers and the customer deposits. Another thing is the quantitative tightening and the inflation. When inflation is high due to outside reasons, the interest rates goes up, increasing the bank's profit per se, and decreases the risks. So overall, this is a good thing. And we have to remember that the purpose of a bank is to make money with customers' deposits, and the current environment allows SoFi to do just that. Overall, SoFi has been growing on a year-to-year basis, but the progress has been slowed down in the recent month. This might be caused by the economic downturn, which puts pressure on all businesses. Despite the unfavorable headwind, the fact that they still managed to grow is a testament of their brand recognition and the traction that it has on potential customers. Due to the regulatory and economic reasons, SoFi saw its student loan and home loan amounts decreased by 51% and 73%. But in the same period of time, this has been compensated by the fact that their personal loans increased by 71%, resulting in an overall net increase of the lending on a year-to-year basis. So recently, SoFi's stock price has been stabilizing and even increasing a little bit. And this is probably due to the fact that on one hand, things are looking slightly better from a geopolitical perspective, in a sense that, first of all, the bad news might have been more priced in. The other thing is that it's possible that people are now seeing through the conflicts to see what's going to happen afterwards. Okay. In my humble opinion, I feel like it's possible that we're going to see some recovery in the equities market simply because I have observed a certain price decrease of the pump price over the past few days, like the price of gasoline. And this will suggest that inflation might be under control. And then it would also suggest that the pressure would also be off in the equities market, at least for the time being, at least for this one single event. And also with the world slowly getting back to opening up their borders, so on and so forth, we're going to see some kind of short-lived euphoria at least. Okay. With that being said, is it going to last? Probably not, because we're due for a recession for some time now. So this might not save us necessarily. Regardless, specific to SoFi, I would say that there are some good odds that we're going to see the student loan payments resumed in the year to come. And this will put SoFi back on the trail for some additional gains, or at least some more positive fundamentals to speak of. Regarding the long-term perspectives, the long-term stock performance of SoFi has been like every other major stock listed on the Nasdaq for the year of 2022. Disappointing. The stock has been down by 70% since the beginning of the year, partially caused by the moratorium of student loan, but mostly also caused by the loss of trust and optimism from investors about the future. And also because, in the current environment, getting a return of 5% plus in the savings account is quite attractive for many people. They don't necessarily want to risk their money and YOLO it into Nasdaq. What also brings down, definitely, this bearish environment will keep SoFi down. As long as the situation doesn't change, it's difficult to see the stock go back up to $8, $10, $15. It's really difficult. With that being said, is SoFi a company that has a lot of potentials? Absolutely. Absolutely. It doesn't necessarily change the fundamental part. But the investment sentiment or the investor's sentiment is very important here. And we should definitely take that into consideration as we go forward. So basically, what lies ahead for us is the possibility that SoFi is going to go through a partial recovery with the student loan as the world economies kind of recover a little bit from the tensions. With that being said, with SoFi's stock price fallen so much over the past few months, I'm also not sure that, just from a mechanical perspective, the stock is not going to fall, the stock is not going to recover from that region between $4 to $6. At some point, how much lower can you fall without a company telling you some specific news that it's gonna that it's gonna support this kind of position unwinding, right? So with that being said, let's take a look at the company's financial books and to see what the numbers tell us. Regarding the profitability, SoFi has a net loss at the moment from the operations, if we include in the non-cash transactions and the non-operating expenses, mostly, interest expenses and equipment amortization. In other words, the computer that people have on their desks, every single year they go down in value. by something like 30% on like I don't want to say mechanically, but theoretically, they depreciate by like 30% on a per annum basis. On the other hand, SoFi is yielding positive gross profit that grows across the past few quarters, which is definitely something encouraging and shows the validity as well as the scalability of the business model. The one challenge that SoFi should address is the cost control, especially when it comes to the operating cost. I do expect the spending to be under control eventually, but for the next few quarters, I believe that SoFi will probably emphasize the growth more than the bottom line, just because they are still in the growth phase. They need to spend money to make more money, this and that. But eventually, the marginal benefit is going to be so low that it's no longer worth to do this. And then they're going to in the phase of like cost control and so on. Another aspect that is very important for SoFi is the leverage. SoFi has a high level of leverage, which is relatively normal given the industry and like the industry that a company operates in, finances. Nevertheless, we got to be aware that the current level may cause some issues down the road, which is already showing in the sense that the equity of SoFi has been reduced and reducing, like going down over the past 3 quarters, which is a sign that the funds borrowed might not have been used for maximum efficiency. The third aspect to look at would be the cash flows that its operations bring to the table, and in this aspect, SoFi is doing a decent job. The free cash flow as well as the cash flow from operations are positive, meaning the company is self-sustaining in terms of cash reserves and brings down the possibility for additional dilutions. When we take a look at the company's ratios, it's easy to see that the company has been lagging behind in terms of valuation, with every single valuation ratio going backward, or rather downward, over the course of 2022. This shows that the company is not necessarily growing as fast as it should be, or at least as fast as its debt increase, which is normal, kind of, given the unfavorable market conditions, as well as the student loan moratoriums. But we should be aware of the fact that SoFi is losing value on paper, and we gotta see whether the situation can rectify itself in 2023. Regarding the company's profitability ratios, what the numbers suggest is that things are being stabilized, and that from some perspectives, even going above the break-even line. In that sense, it's definitely a good thing. It's improving over time. We gotta see whether SoFi can control the cost in the years to come, and actually not just in the years to come, in 2023. I hope that they will increase the profitability ratios, and for now, the gross margin as well as the EBITDA are what matters the most. Now, let's also take a look at the shareholder composition, because this can tell us whether we should invest or trade a stock. Right now, about 36% of SoFi's shares are in the hands of institutions. This is a good chunk of shares, and in my books, this means that we can invest in the company, because 36% kind of offers a layer of stability that the company needs to not dip too low or to increase too high in a short period of time. Like it's not gonna swing around in wild volatility levels, and this is a good thing for people who wanna like gradually increase their exposure in a stock like SoFi. So, with that being said, at 36%, it also means that the stock is going to be more volatile than usual compared to other stocks. Like, for example, Lucid. Lucid has been in for like 70% plus, right? So this means that their shareholder base is going to be very stable. Maybe not the case with SoFi at the current moment, but regardless, it is at a level that it can be invested in. So, as far as the short sentiment and the potential for short squeezes are concerned, SoFi has 12% of its volume shorted, which take about like 2 days to be covered. That's a good chunk of shares shorted, to be sure, but it's also not enough for me to argue that there is a short squeeze going on. Not yet. So my recommendation about SoFi is that it's a stock worth looking at. It's a stock worth putting your money into overall. But I would prefer to see the stock going back above $5 level for me to really put my money in, or to put more money into it. I have a small position of SoFi at the moment. I plan to buy in more when the market has shown that it has enough steam to go above. And also, to be frank, I want to see like the Q1 2023 results to come out before I can make a decision like this. Does SoFi have a place in the future of the economy? Absolutely. But at the same time, like, you know, this future might be a few months from now or a few years from now. What we have to do is to be patient. So for the moment, I would recommend to wait for the stock to reach back to at least $5 and in a sustainable manner before committing more capital. The recommended exposure is between 3 to 5% of your portfolio.